Hi everyone, thanks so much for tuning in. This is Buy Now Sell Now Weekend. I'm Avan Dabash.
Great to have you all with us. I'm Rekha Chadha. Well, this is where, of course, where we discuss all the stocks and the events of the week gone by. So let's take on board the first segment where we'll be discussing your questions on a Crompton Greaves as well as the Tech Mahindra.
And of course, we'll have our Portfolio Advisor segment. So KK Garg's portfolio today is going to be discussed.
Okay, let's bring on board then the two experts who are joining in on the show. We've got on the fundamentals, we've got Gaurang Shah, Vice President at GeoG's BNP Paribas Financial Services, joining in, as well as Kunal Bothra, Head of Advisory at LKP. He joins in to take us through the technicals. Gentlemen, great to have you both with us as always. Let's talk about the first question for the day that's coming in from Rajesh Anbalgan from Chennai. His question is on a Crompton Greaves.
I have Crompton Greaves. I have around 200 stocks. The buying price is around 190. I'd like to know if I can hold for long or I can make some 10-20% profit and can exit from these levels.
Okay, that's a question coming in on Crompton Greaves, and would be interesting to talk a little bit more about this one, given that it put out its numbers just in the week gone by. And in terms of numbers, it was below what the street was expecting. But Gaurang, as a whole, you do have a lot of analysts who are pretty upbeat on the sector, talking about a recovery on account of policies and reforms kicking through. But particularly for Rajesh, what would be your advice on a Crompton Greaves?
Yes, Avan. So 2 points over here. One, his acquisition cost is 190, and he also mentioned that he wants to earn 20% on his investment over a longer period of time. And according to us, your longer term should justify in terms of 12 months to 16 months plus kind of time horizon. So if you have that kind of time horizon, first of all, hold on to your initial investment. Secondly, if you have investable amount in the stock, I think has corrected post those numbers, which was not according to the street expectation. We believe that in the quarters to come by and the policy changes which is expected by the new government, the outlook for the entire sector is going to look much more positive. So I think currently it's trading at around about 170, 175. If he's got an investable amount, he can definitely invest over here. Our conservative target as of now is about 220 rupees. And in case if the policies which are expected to be in line or maybe a game changer for this particular sector, if they come by, we could soon revise those target upwards. But the quarter gone by, we believe it was one-off, and I don't think those kind of negativities could slip over to the next quarter. So hold on to your current investment. If you get an opportunity, if you have investable amount, you can buy it on dips or maybe at current levels around about 170, 175 and expect a conservative target of 220.
Everyone is hoping for big bang reforms from the new government that's come to power. Rajesh, so your entry price is a bit steep, but nevertheless you could stay put here. Target of 220 is what you could expect, and Gaurang advises you could also enhance your exposure to the stock. It's the entry point where I want to discuss even on the charts, Kunal, because clearly that stock was at sub 100 levels for the longest time. In the last couple of months, the rally has been breathtaking. But is it a good idea? Would you advise him to probably be working with a bit of tighter stop so that at least his losses are curtailed in case we do see a sharp correction?
Well, I think, yeah, chances of sharp corrections are there, because I think most of these, the mid-cap names or so-called, the frontline names in the capital goods space, they have, shown some signs of, sharp rally happening. So, a cool off probably in the next, if not in the immediate short term, probably, after the next 2 or 3 months could be possible. And I think if the time horizon is more than, 6 months to 1 year, I think there could be a chance where you might see the stock dipping to 160 or below. I would, since the acquisition price is 190, I think the strategy here should be to try and average it out. If the stock trades at 165 or 170 levels, there I think it could be a good level where you can average your price or bring down your average from 190 to say 175 odd levels. I think that is where I believe that the risk reward would be extremely favorable, and I think if the horizon is more than a year, then I think even 240 is possible on Crompton Greaves. So I think strategy here should be to play on dips and then hold on to it from a longer term perspective.
Okay, so that's a view coming in on the technical side. A correction is not it's not the fact that you can't see a correction. It's not entirely impossible. So do remember to average out at levels of close to 160. Hold on then and watch out for upside. 220 is the target that Gaurang flagged off. 240 is the target that Kunal has advised. Well, let's move on then to the next query for the day. This one in the IT space on Tech Mahindra. Rajesh has a question on this as well.
I have Tech Mahindra, which I bought it for around 1,800, and I have around like 40 stocks over there. I would like to know from experts like what should be the strategy which I need to have on this.
Well, Rajesh looks like quite a conservative investor in his approach, but it just so happens, Gaurang, that his entry price seems to be, the highest point that the stock has touched during the year. Almost that's when I think he gets a bit of comfort in picking up those stocks. But just focusing on IT, we've seen money moving out of the classic defensives, being parked in cyclicals. And tech as a sector is having so many issues as well. You have the currency appreciation taking place. You have movements in, say, a heavyweight like Infosys rattling the entire pack, but Tech Mahindra, good pick?
Well, first of all, I think entering at higher level is not only restricted to Rajesh, but I think most of the investors do enter at higher levels, and they get shaken up by the moves that the market throws out. But overall, as a disclosure, we do have a positive coverage on Tech Mahindra, and we believe that the stock is definitely going to be an outperformer in the mid-cap IT basket. Even as of now, if you actually go to see, his acquisition price is 1,800. The stock is trading close to about 1,900 plus, and you've seen some, visible amount of delivery-based buying coming in. Rupee-dollar equation, I think those are short-term negativities, but you have to highlight upon is the earnings capability of the company, and post the merger of Mahindra Satyam and Tech Mahindra, this particular company has emerged as one of the biggest player in its category and has got diversified product verticals. Like I mentioned, we have a disclosure of 2,200 target with 1 year plus time horizon, and anybody who gets who has an investable amount and gets an opportunity on the lower side, and if is looking at IT as an investment idea, then definitely Tech Mahindra is one particular stock that you should definitely have in your portfolio.
Okay, so some of the short-term headwinds like currency as well as the global backdrop have already been factored in, but the earnings capabilities are strong for Tech Mahindra, and it's some steady upside and target prices that Gaurang has also flagged off. But Kunal, let's get in your view. 1,800 as the buy price. What do you make of that, and what would be the advice based on the chart patterns?
See, I think there are two very key important observations which come across on Tech Mahindra. The first is you're looking at a trend being developing. I think the stock has had a fabulous last 1.5 year, and post that entering into 2014 it went to a consolidation. Compared to all the other IT stocks, it's been outperforming relatively. The fact that it's not breaking the 200-day moving averages and the crucial support levels, and also now that it's once again crossed the 52-week high, also shows a very good strength in the stock. The second and most important, I think, if you look at the technical parameters like Fibonacci extension, right from those 2009 lows till 2011 tops from 200 to 1100 odd levels, the series of targets which come across for Tech Mahindra, the first is 2000 odd levels and the second is 2400. So I believe if the time horizon is say restricted to 3 months, the investor could look at a target of 2020. If the horizon increases to say 12 months or more, I think that is where the real unlocking of Tech Mahindra could happen, and one could look at a target of 2400 as well.
Okay, so let's discuss our portfolio advisor segment then, and today we'll be taking up Mr. Garg's portfolio. Well, he's 80 years of age and he's got a 12 stock portfolio on which he has a long-term time horizon. So quick glimpse at what his portfolio entails. He's picked up about 25 shares of JSPL at 640. He also has MOIL at a level of 294. There's NTPC. So he's picked that one up at a level of 155. Keeping it with the power pack, then he's also got a Reliance Power, about 54 shares of that at 111. Tata Sterlite, 260 shares is what is in his kitty. For a syndicate bank, then he's bought that one at a level of 132. There's 525 shares of Tata Power at a level of 105. There's a bit of banking in the form of IDBI Bank, 100 shares at 132. HCL Tech, also 100 shares, picked up at 1394. And then there's also Tata Chemicals, 100 shares of that. There's 400 shares of IDFC at 129, as well as ITC at just about 20 shares at a level of 370. So before we discuss the individual areas, Gaurang, just a quick word on the overall portfolio allocation. A lot of exposure to power, to metals, and not so much to the consumption theme or even banks for that matter.
Yeah, I guess that's the concern, Megha, and being a retiree and 80 years of age, you should not be concentrating your portfolio into power. Of course, I'm not denying that there are days of changes that are going to come for betterment, for infra, for power, for construction, for real estate, but that's going to be taking a while. And given the kind of exposure he has in some of the stocks, I think it is prudent to, keep power as a investment in your portfolio, but don't keep such a huge exposure. I think out of 12 stocks, he's got almost about 4 or 5 stocks into power generation or transmission. So I would say that you need to lighten up your exposure to power and increase your exposure to maybe power transmission or distribution. Again, over there, it will make sense, because if you are expecting, additional capacities to come up, I think power transmission and ancillary companies should also be in focus. And even, certain churning. I mean, I would say that out of 12 stocks, you need to at least churn 5 of them. So you need to balance your portfolio accordingly.
Okay, so let's help get on board all of those changes in order to help Mr. Garg maximize returns on his portfolio. Start off then with JSPL 640 is the buy price, MOIL and NTPC.
Yeah, so on JSPL, again, huge negativity in terms of the group, mining ban creating a lot of problem, inquiries, etc. Acquisition price of 640 plus looks very difficult, at least even from a longer time horizon. I don't think there's going to be any magical turnaround in this particular company. At best, I can advise a hold over here and maybe close to about 345, 360 odd levels, because you may see some catch up by this particular counter GSPL. Entire metals pack, power generation is doing the buzz around, so you will see catch up by this particular company. So on rallies, maybe closer to 345 or plus levels, you can try to exit this particular stock. And if you're exiting from JSPL, I would recommend a buy into a Tata Motors or a Tata Motors DVR. Of course, yesterday the numbers were not very impressive, but that has given a good opportunity for those who have left out to get into Tata Motors shares or DVR. If you're getting into Tata Motors shares, your target price will be close to about 385. DVRs, maybe 270, 275 plus could be the target price. On NTPC, well, things have finally turned around for this particular company, and post the order which was passed by the CERC, there were huge negativities. But again, the optimism has increased in terms of the new government coming in and power generation being kicked off again, and policy decisions being improved for the betterment of the sector. So I would say hold on to NTPC with a target about 175. On MOIL, well, on this particular counter, I think there are very few people who would be making profits on this particular counter. He is one of them. Hold on for a target of about 345 on MOIL.
Okay, so JSPL, you could stay here, Mr. Garg, till a level of 345 and then switch to possibly Tata Motors. What do you make of a Reliance Power then at a level of 111? There's Sasa Sterlite at 231, as well as Syndicate Bank in his portfolio.
Well, firstly, you shouldn't have bought Reliance Industries at 111. I think he must have just recently got up, because the stock, if you remember, Mega was, virtually an underperformer, and finally has seen the light of the day by surpassing that 3-digit mark of 100 rupees. A fantastic opportunity for all those people who have reduced their losses in Reliance Power or are making profits to exit from Reliance Power. So if I'm advising an exit over here, I would recommend, I just mentioned on Crompton Greaves, earlier investor, we had taken up his query. It's a fantastic stock to get into. 170, 75 decent levels, your downside are protected. Look for a target of 220. So you will possibly have a shift from power into cap goods engineering space. On Sasa Sterlite, again, not a very great stock to be into. You got in at about 230, 240 odd rupees. I would say sell it and get into REC, that is Rural Electrification Corporation. And I just highlighted as to how positive we are on the entire power ancillary and distribution space. So here you can look for a target of 380.
And Syndicate Bank?
Okay, yeah. On Syndicate Bank, again, with PSU banks, the problem has been the asset quality. Though this time around, their fourth quarter numbers are normally much better for the entire banking pack, be it private or public. But I would say huge opportunities on higher side to lighten off Syndicate Bank and switch into something called Power Finance Corporation PFC. Here we are working with a target about 330, and with switch into Power Finance Corporation PFC, you will reduce your exposure to power generation distribution, and you will possibly have an exposure into financing of power projects, which is again things to be looks like to be the themes of to come across, and things could be changing for betterment for all those companies who are involved into power finance projects.
Gaurang, a quick call then on Tata Power as well as IDBI Bank, and what do you think he should do with HCL Technologies?
Well, Tata Power numbers were very bad, and though the stock recovered yesterday itself, we saw the numbers. I believe on Thursday the numbers came out for Tata Power. A huge amount of underperformance. I would say exit from Tata Power. Buy into an entertainment sector that looks quite attractive for us, and Sun TV is something that we would recommend. Numbers were far better, and the outlook is also going to look much more positive, and is one of the largest player down south in terms of entertainment side. So here we are working with a target about 490. Sell Tata Power, buy Sun TV for a target of 490. IDBI Bank, well, sell it, buy into again a private sector bank, but a mid-cap bank, IndusInd Bank. We have recently upgraded our targets to about 660. A fantastic set of numbers, and I think the run rate of good numbers is only going to improve going forward from here on. So sell IDBI Bank, buy into IndusInd Bank for a target about 660. On HCL Tech, stay put. You have picked up a good particular stock. We just mentioned about Tata or Tech Mahindra a while back. Mid-cap, again from the IT pack, HCL Tech looks quite attractive to us. As a disclosure, we do have a positive coverage. We have set aside a target of about 1750 to 1780 on HCL Tech.
Let's take on board the next set of stocks and last ones at that. Tata Chemicals, disappointing set of numbers, IDFC as well as ITC.
Yeah, numbers are disappointing for Tata Chemicals, but I don't think that's going to be, slipped on to the next quarters to come. And if we are talking about revival in economy, investment, capex cycle, etc., then I think definitely outlook for this particular company also looks good, because they are also by and large into a large part of the product rather is into specialized chemicals. So that's going to be looking much more positive. Margins are definitely going to improve going forward from here on. Input cost, if the company is able to control that, margin expansion is a possibility. So hold on to Tata Chemicals for a target about 375. On IDFC, a huge trigger post the banking license and the stock corrected. And what we understand is that management has set aside a time frame of 1 year to roll out the banking branches. Here, conservatively, we are working with a target about 165, but you need to keep your eyes and ears on what the company has to announce on the rollout of banks and bank branches, which will again create value for the particular company in question. So hold on for to IDFC for a target of 165 conservatively. ITC, again a disclosure, we do have a positive coverage. Though there was a concern, or rather there is a concern, that the new health minister is going to increase or levy additional taxes on tobacco and tobacco-related products, which may create a short to medium-term overhang on ITC. But consumption is definitely robust. That doesn't mean that I am endorsing smoking over here. But yeah, I mean, given the kind of diversified product verticals that ITC has, we believe that a target of about 405 should be visible on ITC. But you need to keep your, again, eyes and ears open as to what the health minister has to say.
Well, let's nail it down then to individual recommendations from our experts, Kunal as well as Gaurang standing by. And Kunal, run us through how you would be looking at individual stocks on the charts.
Well, I think it's going to be a tough week, next week also, because you have the RBI policy, I think mid of next week. I think the markets could probably, behave in a volatile fashion, at least for the first 2 days of the next week. The first stock which looks attractive, I think, from a buy on dips candidate, I think, is Coal India. It's corrected from 420 odd levels to 360, 365, and I believe that it's a good entry point for anyone who's looking at medium term investing in Coal India. My targets on Coal India is around 400 to 405. If stock trades above 365, I think that could be a good entry point, and the stop loss is just around that 360, 365 odd levels. The second is a buy, is a sell on IOC. Rather, I think this is one of the few stocks which is forming a negative or a bearish triangle pattern on the hourly charts. The